everyone, I hope that you're doing well. Welcome to this new breakdown lecture of the trade that I took during the morning session of the 27th of August 2024. Before we dive into the lower time frames to take a look at the lower time frame delivery, we must first take a look at the daily chart of both Nasdaq and SES. If you have been paying attention to the daily and weekly reviews lately, you know that we have been anticipating the markets to chop around. The reason why we were anticipating them to chop around was because there was a cracking correlation relative to the previous week's low and relative to the previous week's high for these markets. Where you can see that these black lines represent these levels, you can see that Nasdaq took out the previous week's low, whilst ES is trading above the previous week's low. Next to that, you can see that Nasdaq did not take out the previous week's high, whilst ES took out the previous week's high. The reason why I'm mentioning this is because of the following. Since we were monitoring the reaction to this daily BC right here, I anticipated the market to retrace back into that range from that previous week, from this low to this high. Therefore, the moment that we reached that daily BC at the right time, I was anticipating buy side delivery to step in next, because I anticipate the index futures to be range bound until one side order flow steps in. Now, if we take a look on the hourly chart, what we can see is the following. We can see that during the London session, we form relatively equal highs right here by these two candles. The market then drops lower aggressively, trading into that daily BC right here. Notice that this candle opens up, drops lower into that daily BC. This is the 9 o'clock candle for the info. And we then see the market immediately reject that range, that blue shaded area. We then see the market begin to expand towards the upside during the next candle, drawing towards the London high. If we then take a look on the 1 minute chart, what we can see is that during our macro window, we see a cracking correlation take place on the lows right here inside of that daily BC on Nasdaq. Notice that at 9:45, this big down coast candle takes place, drawing towards the downside, and the market then forms a lower low relative to that previous low which formed here. ES, however, creates a higher low at 9:45. That is SMT, which is taking place inside of that point of interest on Nasdaq during our macro window. That right there was the sign that I was looking for to confirm that the time was right for the market to likely draw towards buy side liquidity next. Now, what I want you to see is that at 10 o'clock we had a high impact news driver. After 10 o'clock, we saw the market just chop around and we just saw very messy delivery. The market began to expand towards the upside and we saw a retracement taking place inside of this BC. Notice that the market consolidated again, and what ended the consolidation? When SMT took place again between Nasdaq and ES, where you can see that Nasdaq creates a higher low during that 10 o'clock hour or the 10 o'clock cycle, whilst ES creates a lower low. That right there was the sign that the time was right for the market to begin to expand towards the upside. This is what we call spooling. What I want you to understand is that SMT takes place at multiple phases inside of the market maker buy model. Therefore, we're also looking for SMTs to confirm that an expansion is near inside of a later stage of the market maker model. So not solely inside of the SMR, as you can see here. If we then pay attention to a more in-depth chart, what I want you to see is that I have plotted specific time windows on my chart. I'm going to walk you through this whole delivery and through the overall thought process that I had whilst executing in front of you. For the people that have access to the Uncensored series already, because you went through the whole model series, you will have watched me execute this in front of you. Meaning I began recording around here and I shared with them I'm looking for a retracement to take place into this BC. I will buy off that BC and my stop loss will be below this low, because the market should not displace below that low. Why was I anticipating that? Why was the overall thought process, okay, we should expand towards the upside? Well, first of all, based upon the higher time frames, I already suggested the idea of us likely trading back into that previous weekly range and drawing towards buy side liquidity next if we would reject this daily BC. But if we pay closer attention to the morning session, which begins at 7 a.m., 7 a.m. not being visible on this chart, but we can see that this high right here was the high of 7 to 8:30 a.m., we can see that the market begins to run towards the downside all throughout that cycle. Notice how we go back and forth, back and forth, back and forth, back and forth, back and forth. What does every retail minded trader think when they see this delivery? They think, okay, the markets are very bearish. We should go market short. We can draw a clear trend line from this high all the way to the right, and that is going to function as resistance from price, and the market will continue to fall. Surely you can see that the market in fact continues to draw towards the downside, and between 9 to 9:30 you can see that the market consolidates. It's going back and forth in this area. Why is it consolidating? You can see relatively equal lows get created right here, and you can see that at 9:30 the market drops lower initially, forms this low here, then runs higher, taking out the buy side liquidity resting above these relatively equal highs here, then rejecting them, and immediately spools towards the downside. Why does it begin to spool towards the downside? Because during this consolidation phase between 9 to 9:30, something very important is occurring. Liquidity is both being engineered on the buy side as on the sell side. At 9:30, when the regular trading hours begin, we can see that the market first tries to gravitate towards this buy side liquidity, takes it out and forms this high right here. They're engineering buy side liquidity for a later point in time, and we run lower into that daily BC, into that point of interest. When this point of interest gets met at the right time at 9:45, and we begin to see the market displace higher, trading above the high which set up that final manipulation leg lower, you can see that institutional order flow entry drill is taking place right here. This BC gets created, the market opens up on the next candle once the BC is created, drops lower into the higher part of this BC, and immediately slams away. Next candle offers sell side into this candle's high. This is immediate rebalance. What does the next candle do? Flies away, creating this sequence of imbalances. What I want you to understand, guys, is that if you were able to get in sync here, you had a completely failed entry. The reason why is because we took out the sell side liquidity resting below that previous 30-minute cycle low, these relatively equal lows here. We traded into that point of interest. At the right time, we formed SMT. We displaced above the high which set up the final manipulation run lower, and we see the market create a BC. I was personally not available yet to get into the position right here, so that was unfortunate, and therefore I had to wait for a retracement to take place. But that is what I want you to understand, guys. When you have an entry opportunity that you see, but that you're not able to engage in, don't worry, because if you recognize that the entry opportunity that you see is the low risk phase within the market maker model, all you need to wait for is for the next phase within the market maker model to take place, and that is where the opportunity will present itself. The market displaces away after having done immediate rebalance here. Pay attention to this CB on the left side of the curve as well. So you now have everything suggesting to you that order flow has changed from bearish to bullish, or from sell side delivery into buy side delivery. The premium rays on the left side of the curve are beginning to fail to function as resistance on price. The market displaces above the high which formed shortly after 9:30 here, and we can see that the market retraces into this lower BC here. This lower BC right here is very important. Do you see that I have that horizontal black line here? For the people that are paying attention, they are probably already understand what that horizontal black line is, but let me explain. That horizontal black line is the previous week's low. Do you see that we displace through that price level, confirming that we are going to likely trade back into that range when the time was right for the market to change from a sell program into a buy program? Market retraces into that BC. I went long inside of that BC, and my stop loss was below this low. The reason why my stop loss was below this low is because of the fact that this BC should not get violated if the market is going to in fact expand towards the upside. Why? First of all, pay attention to this opcos candle. It's a bullish breaker. Notice that we form a low right here. We form a high, lower low, higher high. Or you could say we form the low right here, we form the high, lower low, higher high. Doesn't matter. Both patterns are breaker patterns. Market displaces through that high with a sequence of imbalances. So therefore we already have two arrays that should function as support on price. if order flow has in fact changed from bearish to bullish. Notice that if we look on the left side of the curve between 8:30 to 9, we can see that we also have this CB right here, which displaced through the previous week's low in the first place, which you can see right here. But what is more important about this stop loss placement is the fact that this low already rebalanced this price action right here by trading back into this inversion for further gap. So the market should never drop below this low anymore if the order flow is bullish. Therefore, we see institutional order flow entry drill taking place, and therefore I was not afraid of going long in advance of news at 10 o'clock, because I understand that the news is likely going to get utilized to reprice towards the upside. The market then consolidates and it chops around. Inside of this consolidation, something very interesting occurs. And that's something I would advise you to investigate when it comes to Nasdaq and ES relative to the bodies here. Market forms the low here and it begins to spool towards the upside. We trade above this high. Why is this candle right here, its respective high and low, extended to the right? This high and low is extended to the right because it was the high of the time cycle of 8:30 to 10. What do you know about time cycle theory? When the market displaces above a previous cycle high, you need to see that high function as support on price if the order flow is in fact going to continue to be bullish. Therefore, this candle has to function as support on price. And what confirms this is the fact that we displace through it with this BC. The market retraces into that BC and we see the market chop around it, consolidates. When does consolidation end? When there's SMT present. SMT forms and the market begins to spool towards the upside, and notice how the bodies kept on closing inside of this BC. The market draws towards the buy side liquidity resting above this high right here, and that was my idea done. That was my trade setup done because we formed a new high for the morning session. What I want you to understand and what I want you to take away is the application of time-based liquidity paired with true signs of recognizing institutional order flow. Paying attention to very specific levels, higher time frame levels, how we trade around those levels, and how we basically look at the use of alt arrays on the right side of the curve once they get displaced through. Pay attention to the SMTs because they are crucial. SMT confirms that expansion is likely going to take place. With that, this lecture comes to an end. I hope that you found it insightful and I look forward to catching up with you in the next one. Be safe.